Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, April 12th, 2022. I want to do a quick update on some of those trade ideas that I've been highlighting recently, and pretty much the same ones we covered yesterday. I'll throw in one more, do an update on one of those educational online stocks that just wanted to highlight today. Otherwise, we'll do a quick update on the equity markets, gold, silver, Treasury Bonds, crude oil, again, everything that was covered yesterday. And that's starting out here with the 60-minute chart of QQQ. You have this wedge type pattern. You do have the divergence on the RSI, but not on the PPO. I like to see them both. And so far we've had that pop. We drifted a little lower after the video yesterday, but we got a pop. We've almost filled that gap. Let me see here. This is the gap right here that I was referring to yesterday, and we came dang close to the top of it. That's the gap from the other day, and popped up and almost backfilled it. So let me jump down to a 5-minute chart. That might show a little better. There it is. Yeah, you can see we had this trend line here. That's really where that trend line should be now on QQQ. I just pulled it up a little bit, and you can see a near backfill the gap, but not a full backfill yet. But I'll tell you, coin toss odds, I'd give it whether the counter trend bounces over or not, or if you're going to make a full tag of it. But remember, bigger picture is we were recently rejected off the 200-day moving average. We remain below the 200 days. That coupled with divergences and everything going back for months, I've highlighted market breadth deterioration, the internals and everything else going on there. I'm still going off the my primary view that we are in a much larger correction, bear market really. I'll just call it what it is. It started with the highs back in November in the Nasdaq 100, and I continue to focus mostly on that. That's when the economy is growing and when it's expected to grow. And I know most pundits still are, bullish. That's just in their nature. Calling for, big earnings coming up, and we are coming into earnings season. But kind of shrugging off the impact that rising rates are going to have on the economy. Again, that's just my kind of the general consensus that I get, that the majority of market analysts out there are still bullish. And again, I go off technicals first and foremost, but then fundamentally you're looking at one of the what's probably going to be the most aggressive Fed hiking cycle in many decades, and we're only in the early stages of that. Inflation numbers came in roaring hot today again, 8% or so on the CPI. Anywho, let's just trade the charts, and that's it. So, remember, in a downtrend, it is not unusual to see the seller step in early. A lot of eyes were on that gap backfill right there. Again, you have 1, 2, 3 distinct reactions there, including the top of the gap at about 380, 348.70. But we got close enough. And if you're looking for a gap backfill, but you're bearish and you believe you're in a downtrend, you don't hold out for the last penny. Maybe you get it. Maybe they even pop it and then reverse. But if you were looking to exit longs or get short, that's where you should have done it. I would have posted an update earlier today. I was out in appointments all day. I had a dental cleaning, and then I went and did some other things since I was out. So catching up now, and then that's where we're at. So I'd say decent chance the bounce is probably over. And again, same story holds. You got to take out the recent lows right here. These are your big levels. And as I said before, I think if we get anywhere close to those recent lows, when I say anywhere close, down here, I don't think it's going to be another test. You could have another reaction there. I mean, anything's possible. They could have another test and blast off the new highs. But I think if we can get down there, then we'll just go on right through there. One way I like to look at things, I try to put myself in the shoes of my opponent, if you will. If I'm bullish, then that means those that are short and bearish. If I'm bearish and short, as I am now, I told you guys, as we came up to those 200-day moving averages recently, I started scaling in and got up to the point we hit it. I had a pretty aggressive short position. Swing, trend short, which I still do, and I'm talking the longer term accounts, the positions that I'm holding on. And so therefore, I'm looking at the bulls. Now, remember, I was long, covered those shorts off that divergent low, even did a pivot intermediate, even covered the longer term shorts as well, not only going long in the active trading account there, but didn't milk it all on the upside, but got a good part of it, and then got short again here. And so what I'm looking at is, as far as my opponents right now, those are bulls, people that want to buy and may prevent this, or would prevent this from happening if there's more of those, than those that want to sell. When being a person that wants to sell, it doesn't matter whether you're long currently holding stocks, that's a willing seller that wants to get out of those positions, or maybe a short seller with cash sitting on the side, or a combination of both. I trade long short. But what I wanted to show you is turn off all the lines for a second. Or no, let's leave the lines on, because this is that bullish falling wedge breakout right there, right? And so there was the breakout. It was very, very well defined. That trend line was extremely well defined. We broke out, we ripped. Look what's happened so far. There's the breakout. We pretty much faded the almost all of the entire run so far. So it was bullish as that was and felt. It was great if you were long, painful if you were short. Well, that has now been wiped out. Those gains have all been wiped out with this move down. Now, look, we're pretty much back testing the entry there. So bulls want to see this. They want to take it and run, especially here. So I'm going to just turn off all the lines right now and show you all the key levels here. Okay, remember right here. Now we're on a 60-minute chart, but on the daily chart, that was that big to me and big to many others, 200-day simple moving average right there. The test, actually a couple tests. So that is big resistance right there. It's very important resistance on the long-term charts, daily and weekly. And here on the short-term charts, you pretty much had a double top there, and you also had divergence, negative divergence. Just like you had the positive or bullish divergence there, was the catalyst for the rally we had. And also, as I pointed out, that in a that's not what I wanted to do. I just tried to hit the exit key. In a bear market or a bear trend, bullish chart patterns fail to play out to their full measured target or beyond. And what I mean by that is, for years now, I've looked for these 60-minute divergent lows and highlighted those, and those have been the catalyst for the move to the next high in the market when we had corrections. And this time around, we fell well shy of the highs. Remember, the November high is way up there. So not only so far, now it's not over yet, because that could still be the catalyst. Maybe it's going to be an A, B, C, or something different. But as of now, it's a pretty impulsive reversal and rejection off the 200-day. It's also a fade of this whole rally here, post breakout, right there, the wedge. And it's also it fell shy of the measured target. The measured target of a bullish falling wedge. Take the widest part of the wedge, add that to where it breaks out. And it was, let's see, I have to measure it. I did this once before for you. Let's see, the widest part would be right there. That tag, take that there. And that would be our measured target up here. So we fell shy of that so far. Now look, all right, anybody's game, like I said, this little wedge, even though there's only RSI divergence, no PPO divergence, could still play out, so we'll watch it. But what I want to see, going back to what I was just showing you, is to keep it very simple. I would say that's it. Those are the big levels to watch. Those recent highs, because again, if taken out, you take out the 200 days, which are now falling, and the recent lows. That was a major double bottom low, big support there, and so it's not an all or none thing. I can't say bulls definitely win if they take this out, bears definitely win, but it certainly increases the odds. I don't want to see this for my long-term shorts. Now, I'm in good entries, scaling back into those. I'm making a mess of this here, scaling back in there. And so I could certainly allow for a marginal pop there on those long-term short positions, and break to the downside. Doesn't guarantee you're gonna go on to hit my next targets on the weekly. You could certainly see any kind of whipsaw there. But again, if you see that, then that's taken on face value if it break down below the recent lows. And if you recover and more than just a day, you make a solid recovery back, then take it for what it is. And if that's the case and you shorted there, added to shorts, you could always stop back out. So that's it. Let's keep it simple for now. That's where we're at. And we're also in what I would call no man's land then. If that's the biggest support level by far, which I believe it is, to watch, and that's a pretty significant resistance level, we're smack in the middle right now. But being that we already got rejected off the 200 days, I covered that in the video yesterday. The history shows us during the previous bear markets and big corrections, it's not unusual to see a first test followed by a rejection and another test to come back to test the 200 days. And it's that second one where the big drop comes. That's where you usually get the impulsive selling. So doesn't have to play out that way, but that's something I'll be looking for. And as such, again, I think it's even though we're in no man's land, not what we're the takeaway from that's not the best time to be starting shorting positions, but maybe add to or at least sit tight on what you have if you did short anywhere up around into the 200-day moving average, or heck, even if you shorted back here and we had all our original sell signals and objective short entries, many of those at that point there, you're still profitable. All right, enough on the markets, just a quick update on the futures. And again, I'm just sticking to the NQs. On this one, I still do like RTY, the small caps, because we recently rallied back into a major resistance level there. But this is a 5-minute chart of NQ. Showed you we had the divergence building, which was a catalyst for this pop. This is what I was looking for yesterday. We drifted a little lower, but then we did break out. We hadn't broken out of the trend line yet, but then here it is. We did break out and back tested the that 5-minute downtrend line. Well defined, lots of reactions on it. As I highlighted yesterday, and boom, so far good for a reversal, about a 2.82, almost 3% rally. And you can see there just shy. See, there's that resistance level I gave you, 14,306 right there, and close enough. Again, if you're in a primary downtrend, anytime, I don't care if you're in an uptrend, if that's your target, 14,306, you don't hold out and set your sell limit at 14,306. Why? Because sellers often step in, or sometimes do step in early, and so you don't want, it's not worth trying to get an extra. That was what, a fraction of a percent, well less than under 1%, probably immeasurable here. Yeah, 1/10 or 1.14, whatever, call it a 1/10 of a percent. So for all intents and purposes, that target was hit. And then going out to the 60-minute chart, let's just go down to 2 months, hourly candles. That's what it looked like. Actually, look where we fell to, right hair above that 13,865.80 level. These lines have not been touched. These would have been the same levels I shared with you if I covered this one yesterday or last week. And you can see how well these levels are working. The buyer stepped in just a hair below that 13,865. There was that divergence I highlighted. And look, it's still on this chart, not so much on the QQQ, but on this futures chart, NQ, Nasdaq 100 futures. You do have divergence on both indicators. And that's why that, coupled with the fact we're in no man's land, it just means it's not an all-in short moment. You know, it's one thing if you want to be aggressive, but not all in. When I say all in, by the way, I'm never ever referring to an entire portfolio. I'm just saying the amount that you would dedicate to an index short, if it's, let's say, 30% of your portfolio would be your all-in moment, but it's not that. In fact, this was a nice, clean, bullish falling wedge pattern, and it was a breakout, rallied right into the first resistance level. I have it here at 14,294, right there. And that's what we hit. We pulled back. So that's why, you know, we're chopping in no man's land. We have this recent low. These are the big lows here on the 60-minute chart. But in the near term, we need to take out this low right here, 13,865-ish right there. And bullish if we could pop that 12 or 14,294. But this is an even bigger level up here, 14,674. Okay, so that's it. Very near term, a little bit unclear where we're going, but let me show you some other things. Okay, Treasury Bonds, I've been watching, but I finally got some charts out to you yesterday with all the futures. And again, your prerogative if you want to trade the ETFs that I mentioned. I even threw out some leverage ETFs. But there it is. So these were the best looking setups yesterday. That's why I got those out to you with the individual charts. These were just beautiful bullish falling wedge pattern here, especially on the 5-year, which I've told you I took all three, but I'm overweighted the 5-year, and that's 5-year ZF, 5-year Treasury Bond futures. Boom, perfect tag at T1, followed by a reaction. We hit it this morning. We've been kind of consolidating on it, and still favor a move up to at least T3. and quite possible probably get a reaction there. And if we can take that out, maybe T4 and T5. So as of now, again, this is just the initial target. Maybe a pullback. Anything's possible, obviously, but so far so good. And I like how impulsive. I knew it would be impulsive because that was again, the better defined a trend line is, the more eyes are going to see it. I know sometimes I might see things in the charts that might not stand out to everyone right away, but again, hate to say it this way, but blind man could see this bullish falling wedge. It's just very apparent and obvious in the divergences and everything else, and the fact again that the 5-year yield hit a major long-term downtrend line as well. So anywho, that's that. And of course, that comes on a day that inflation numbers came in red hot. So again, we all know the Fed's going to raise, but the big thing is how much of that's already been priced into the 5-year. Now, the 30 and the 10-year, they have more cross currents. This is going to be more of a pure play on what the Fed's going to do. So either way, that's the 5-year. I want to show you the 30 and 10-year. Let's just go in order here. Let me dig up the 10. I can see the 30-year ZB, but the 10-year is ZN, and here it is, ZN, boom. You can see yesterday I gave you T1 here, and I was fully aware, and I had it on there. There was a secondary downtrend line, and that's pretty. I could have called it the first target, but I believe we'd go through it, and we did. That's why I didn't list it as T1 where I normally might. I gave you the minor downtrend line, the wedge, and the same thing. I'm pretty sure you can see this in the videos. Very impulsive breakout. Nice move in the treasuries across all of them today. Here it's candlesticks, and so there you can see it nice and clean. That secondary trend line's been taken out. T1, 121.066, T2, T3, T4 would be my final target if and when we get there. So, if you took the breakout right there, you can set stops at break even, you can set stops below the recent low, you can trail stops up, however you want to do it. Still like them. And I still think there's more upside. ZB, the long bond, 30-year bond, beautiful bullish falling wedge, confirmed with positive divergence, etc., etc., etc. And same thing, an impulsive breakout, and still well shy of the first target on ZB. More room to run if that target's going to be hit. This one's pretty significant. If you're looking for hey, where to take profits and run. I think T2 if you want some early profits. I mean, obviously T1's your earliest profits if you just want to get a quick pop and believe there's going to be another leg down, which there could be. There's a lot going on in the bond world right now, but that's a little bit more significant resistance level right there at T2. That's 146.031, and but based on the pattern and how bearish the market has been on bonds, I think there's going to be a lot of short covering. That's why I believed not only were the patterns so well defined and clean in bonds being oversold, but I think you probably have a lot of shorts that are getting blown out of the short Treasury bond trade right now, and there may be a little bit more to come, especially if we can push up a little higher. We should get some more short covering. So that's it. I just want to mention they broke out. Buy signals were triggered today, and they still look good. I still believe more upside is likely. Crude oil, also nice move off that 93.64 support. So far we're up almost 7% today. You can see down here. Oh, no, you cannot see. Let's see. I can see I have that chart cut off. Now you can see it in the very bottom corner. This chart got all moved around. There we go. So about a 7% lift in crude oil today. Again, priced into the charts here with the I'm trying to get that all straightened out. Falling to the 93.64 support, just like it did here, just like you had a bullish falling wedge there, positive divergence, etc., etc. Wash, rinse, repeat. There's your wedge. There was your breakout. There was your move. That ended with that bearish rising wedge. We shorted it there. That was put up as a setup on the site. We milked the short down, and then we've come full circle. Bullish falling wedge at support. Boom, rallied right up. I have not touched these lines. You can see hit that 101.10 target to the button, and so far that's what stopped the rally cold. Hit it this morning on that candlestick right there, 10 p.m. candle, 10 a.m. candle, I'm sorry. The second candle, the 11 a.m. candle, the body of it stopped right there. The top of the body was on it. And so far, this candle, the body, the top of it was right on there as well. So that's what we call, or what I call, a reaction. Rally, when you're rallying into something and you have either a consolidation, which we've had so far, or a pullback. And if we pulled back to backtest the trend line, that would be objective. But this was a pretty powerful divergent low. We could just pop on through there and head on up to that next target, 104.56. So far, so good there. And let me wrap the video up with just one individual stock trade idea. For months now, I'm looping back from time to time to a few different things. One of them have been the online education stocks. And as I said, a lot, but not all that I covered were Chinese companies. This one looks like it's, I'm assuming it's in the Cayman Islands, out of there, because it says Rise Education Cayman, REDU. It's one of the about 24 that I've been covering. And the reason I'm pointing it out to you, and not that it's up today, but it's pushing that 97. That was a price target, and it's become resistance since. This one, we had this big divergent low right here with the first trend line there. We had a breakout. From that breakout, this thing ran, or really from the divergent low, it had a big run up, about 130 something percent, rallied into that 97 level, and you can see it was resistance here, resistance there, resistance there, there, and we're at it again. So the bigger picture on this one, it's been consolidating here between that 73-cent target and the 97. And if it can pop that, it's going to do two things. It's going to, number one, it's going to take out resistance. It's going to break out of that trading range, and that in itself is good. Last time it popped that level, you had a big run there. But the other thing it's going to do, it's going to recover, get back above that $1 share price, and that's usually, you'll see a lot of buyers come in because if stocks trade below $1 share too long, they face being delisted. Now that's the risk for this entire sector. A lot of these companies, especially the Chinese ones, facing delisting, and I don't know where we're at with that. They get delisted, they can still trade on the pink sheets, bulletin board, wherever they're going to trade. But I just want to point this out as a setup. So watch it. Now look, intraday pops are not unusual. We popped intraday. We had a high today of 99 cents, so really about $1. And look for volume as well. We're seeing some volume last couple of days, by the way, guys. If you can see these volume bars here, there was a big day of buying right there, but we didn't get above. So either way, I think it's set to pop, and target, I'll give you one other. I'm going to give you two targets right now if it does pop. Get up 149, and again, just shy of that. That's the actual resistance level. And then 187. And I'll give you a third one because we already hit the 187 once back there. That's the bottom of the big gap. Remember, all these companies had big significant gaps back here on this day. That's when China had a crackdown on the industry and sent a lot of those stocks. And then, others got thrown down with it. And again, I don't know if I'm sure. I imagine this one's based out of the Cayman Islands because of the name, but I'm not sure. I didn't look it up. I'm not looking into the fundamentals on any of these. I'm just trading technicals here. March 20 or July 23rd. That's when they gap down. So if it can get some juice behind it, that would be the max target. If you get a backfill of that cap, I would take the money and run. That's what I'll be doing if it happens. So that's 97 up to just that first target would be a 54% gain. To the bottom of the gap, that 187 level, about 93%. And then if the gap is entered and backfilled, you're talking about 127% rally. As such, you could, if you're targeting that, you could have a stop all the way down here below the bottom of the trading range around 73, and you're still having about a 5-to-1 risk-reward ratio on that trade, which is excellent. That's if you're targeting the backfill. But even if you're targeting just a test to the bottom of the gap, you're still looking at a pretty decent RR, or keep a tighter stop. That is about it. Let me look over my list. The only other things I'd mention, I should do an update. Let me just do it while I'm here. Have your attention. Gold and silver just looking nice, but gold ran into that. Again, these are same levels I've had on the chart. 1981.76 was my next target, and that has now been hit. Check. So I gave you a couple weeks ago, if you weren't around, to give a hard buy on gold and silver right here at that low. Nailed it so far. It's been a nice move, but we are at resistance, slight divergence as well, and so wouldn't surprise me to see a pullback. Nor would it surprise me because I'm bullish on gold. I'll tell you, if the euro cooperates in the dollar, which I think they will, boom, you can see a big move coming in gold, and I think it'll happen. So we're at resistance. Yeah, there's small divergence. Yeah, we might get a pullback. Where to buy if we do that trend line right there, that uptrend line, that would be an objective long entry, or in a solid break above that 982-ish level. So far, so good. Nice move today in gold, and of course silver. I continue to be overweighted. I own both, but have had a preference to silver for a while now. And I'm going to dig that up for you, and we'll wrap the video. There it is. That one popped above that next target zone. Top of that target zone is 25,673. Of course, I'm talking about silver futures. You can trade SLV, or which is the ETF for silver, or any of the other ones, including the miners, SIL, silver miners, or GDX, gold miners. There's your uptrend line. So there, if this little divergent high plays back and you get a pullback to the trend line, that would be an objective entry. My next target's up here at 26,382, and then I may mention, and we'll see, I'll just get to that real quick, the US dollar. These are dollar futures. This is a 6-month chart of 120-minute candles, and I've been pointing out this negative divergence that's been building on the dollar index. Sharp uptrend line here, and there's if you look closely, it's a breakdown and a back test. And so a falling dollar is net bullish for gold. Now the dollar's been going up, so I view that as very bullish because gold and silver have been going up, and there's a direct correlation or impact that a rising or falling dollar has. Typically a rising dollar is bearish on gold price. It's a net bearish event. But what that means, net bearish, it's the effect because it's now the dollar's rising. It takes more dollars to buy an ounce of gold. It typically causes the price to go down. But you have an overwhelming bid beneath the price of gold and silver right now. In other words, more demand. You have more buyers going in. So when you get gold going up when the dollar is going up, all the better if the dollar can reverse during that trend. When you have a lot of demand for gold, then this is going to be an added tailwind for that trade. And then of course when you break 96,344 and you come on down to my next target, what's this going to entail? This would be Powell kind of pivoting a little bit, being a little less hawkish. That's it. So I think what's going to happen, they'll give us 50 basis points at the next meeting, and the pundits are all going to come out and say, yeah, the Fed did that pretty heavy. They talked it. Maybe they're going to jawbone things down a little bit, but the market will probably suspect that they may be on, that may be it for a while, even though we're supposed to see a series of hikes. Anything's possible. I'm just telling you, this chart tells me that there's going to be a likely reversal in the dollar soon, and that should be, if it happens, net bullish for gold and silver. Likewise, I jumped down to a 60-minute chart here, 3 months of the euro. With euros basically the dollar in reverse. See this? You've got a nice big old divergent low. You had a trend line there. It was broken, back tested, additional marginal new low, I should say, extended the divergences. And so the euro really needs to pop about that 110-ish level with conviction and run up to there. If that happens, which I suspect it will, and with the dollar falling, that should be very, very good for gold and silver. So still like those. So to summarize, and this is where I was yesterday, last week, I'm bullish on the precious metals, bullish on long gold, silver, bullish Treasury bonds. Right now, crude oil, you know me, I'm long today, short tomorrow on that. And then also equities. Net bearish, but you know, still want to see, really want to see, and this is what I'm keeping an eye on before getting too short, too bearish, is the I want to see this divergence go away here. We've got that on the futures, that what I covered earlier, that little 60-minute bullish falling wedge. So far, that's just the initial breakout. So we could have more upside to come. And I'd like to see us take out the recent lows, take out these divergences, and then that's where I think we'll get that big kind of waterfall sell-off that just takes out the recent lows. So, but as always, spread your bets. That's what I do. Maybe I'll be wrong today on the equity, or wrong tomorrow on the equity markets, and right on gold, or wrong, wrong on gold but right on Treasury bonds, and that's the whole name of the game. Don't put all your eggs in one basket. All right, guys, we're going to wrap it up here. Get the video out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.